How does physical gold act as a safe haven asset? Imagine a time when everything around you feels unstable, markets are dropping, currencies are losing value, and uncertainty is everywhere. In such moments, many investors turn to a trusted friend that has stood the test of time. That friend is physical gold. Gold has been valued for thousands of years, and it continues to serve as a reliable way to protect wealth during turbulent times. When you buy physical gold, like gold bars or coins, you hold a tangible asset that can help you stay secure when other investments falter. Physical gold acts as a safe haven because it keeps or even increases its value during economic crises, market crashes, or geopolitical conflicts. And like stocks or currencies, gold is not tied to any one country or company. This means it often remains stable or appreciates when other assets are losing value. For example, during a recession or high inflation, gold prices tend to rise because people see it as a way to preserve their wealth. Gold's long history of holding its value makes it a go-to option for investors looking for stability. Another reason physical gold is seen as a safe haven is that it serves as an inflation hedge. When the cost of goods and services rises and paper money loses purchasing power, gold prices usually go up. This is because gold is a physical asset with intrinsic worth, unlike paper currencies that can be devalued by governments or central banks. When inflation hits, gold often outperforms other investments, helping investors maintain their wealth. Adding physical gold to a portfolio also helps diversify risk. Gold's price movements generally do not follow those of stocks or bonds. So, if the stock market drops sharply, gold can act as a buffer, reducing overall portfolio losses. This diversification is especially useful during times of economic or political instability, when markets tend to be unpredictable. Physical gold also has no counterparty risk. That means you own a real, tangible asset that doesn't depend on someone else's promise to pay. Unlike bonds or paper commodities like exchange-traded funds or futures contracts, gold is not subject to default risk. You can hold it in your hands, and it's yours to store securely in a safe or a vault. Gold is also highly liquid and accepted worldwide. You can buy or sell gold easily in many forms, such as coins or bars, and convert it into cash quickly if needed. This liquidity is vital in times of crisis when quick access to funds is necessary. Gold's universal recognition makes it simple to trade, no matter where you are. Another benefit is that gold acts as a safeguard against currency devaluation. When governments print more money or face economic problems, their currencies can lose value. Gold often moves independently of these currencies, helping you protect your wealth from losing its worth. It's like an insurance policy against the decline of fiat money. Lastly, physical gold is a tangible asset with intrinsic value. Unlike paper assets, which are claims on other entities, gold is a real commodity you can hold. This physical presence provides a sense of security and trust, especially during financial system disruptions or systemic risks. Investors often choose to buy physical gold as part of their overall strategy to hedge against inflation, diversify their holdings, and safeguard their wealth during uncertain times. It's a straightforward way to own a real, valuable asset that has stood the test of centuries. When you hold physical gold, you have a form of financial insurance that's independent of banks, governments, or electronic systems, making it a dependable safe haven in the world of commodity investments.